Hello, everybody. This is John Blank, Chief Equity Strategist and Economist at Zacks Investment Research. Today, we're going to do the third of three parts on consumer staples. We've talked through a lot of material on industries and major stocks in the consumer staples space in the first two of this series of three. Today, we will do what are the best consumer staples ETFs. I have three parts to this and 9 slides. Part one, top stocks in the top 10 consumer staples ETFs. So we'll start a little bit in the past, talk about the top stocks and top industries, and we'll show you the top 10 ETFs, how they construct the structure of the consumer staples idea as an ETF. As we'll learn, is a lot of different choices here amongst how to construct an ETF from the top stocks. Part two, we look into the returns on these large consumer staples ETFs. This is a backward-looking return structure, not a forward-looking return structure. Keep that in mind. The forward look on returns for the largest consumer staples ETFs may be quite different in this environment. Also, we're not going to get in today when the turn or rotation to these stocks will be. Could be now, could be in the future. Consumer staples ETF valuation metrics will be part three. I have 3 stocks or slides here. One will talk about the falling market beta of these staples stocks. Fascinating subject. And then we'll get into the price to earnings ratios and the price to book value ratios. So we've got 3 parts today, and it's fairly straightforward. Well, let's first off go back and give our disclosures. And that is, this is the views of myself, John Blank, PhD, and they're not necessarily the views of Zacks Investment Research. So, part one, top stocks in the top 10 consumer staples ETFs. Like I said, we're going to first stop in a place we've already been, and then we'll carry on. So, from the past 2 slides series, you probably can remember that we have already gone through these industries, consumer staples industries, and these major stocks. Here's the company names if you want to tie to the major stocks. For example, we're going to have apparel industry. That's Nike and Lululemon. The beverage industry, Coke and Pepsi are the major ones to play here. Momento, as I told you, is Mexican. And down here we have Kenvue, which is a pure play consumer products miscellaneous staples area. We're not going to hear much about these 2 names. Keep in mind, this is exactly what you want to know, is that sometimes names that we're picking up here as major stocks will not be found in ETFs. So this needs to be understood. Well, past 2 times we did talk about stocks like Kenvue and Momento. Probably not going to do that now. Also, for example, food. Keep in mind, we're going to have some ETFs that are fully food and beverage related and have none of these other names. So food and beverage is an area that has its own set of ETFs. Keep in mind. Also, Procter Gamble is generally speaking the number 1 stock in all these ETFs. On a market cap weighted perspective, you're going to see Procter Gamble as the number 1 stock. So when people think about consumer staples broadly, it is effectively Procter Gamble. Now here, of course, Unilever PLC is the number 2 brand. That is, of course, a European company, doing the same thing that Procter & Gamble is, but based in Europe and spreading out from the world there. The other thing we're going to find here is some of these international names are grouped in either Europe consumer staples ETFs or global ETFs. This will be also very material because we're going to have the ability to play just US specific names or European or global names. Okay, so keep this in mind. Of course, publishing, these are very small names. They're not going to amount to much. And the tobacco names, of course, have their struggles because some people simply don't want to invest in tobacco. So that leaves us with miscellaneous staples. The soap and cosmetic names, the food names, and the beverage names are the primary drivers for these sets of ETFs. Always can come back here and bone up on this material. It's the way to do this. Skip around the slides and keep yourself active in using and cross-referencing data tonight. All right, top 10 holdings in the top 10 consumer staples ETFs. These are under the AUM perspective. So my top is actually how big they are in terms of how much assets under management are in them. And as you can see, if you go from the top 3, 4, 5, you have $1 billion under management up here, from anywhere from 16 to 6 to 1.6 to 1.4 to 1. Down here, you have the smaller ones from 800 million to 500 million to 550 to 200 to just 100. This is very material. So keep in mind that when you see a V up front, that's typically Vanguard. So this is our Vanguard Consumer Staples ETF. Usually these are the lowest expense ratios and have a good benchmark performance here. Of course, this is the iShares US, and this will be the Spider BlackRock. So let's see here. There it is, Spider Consumer Staples, Vipers Consumer Staples, and iShares US Consumer Staples IYK. IEV is Europe. So here you can see IEV is the European names, IYK is the US names. And again, you can see this. Nestle and Novo Nordisk, surprisingly, they put ASML, which is a Dutch chip company, in here. Shell is in here, AstraZeneca, Novartis, right? Really interesting what happened here. These aren't actually even consumer staples names. Over here they are. Procter Gamble, like we talked about, 17% of the iShares Consumer Staples US. It is 15% in the Spider, and it is 13%, 12.5% in the Vanguard. So really fascinating. This, again, like I said, would probably be where I would set my thoughts about what a consumer staples ETF is, and then broaden it from here to there and there. As you can see, this one and this one are not so different. These actually share the same top 6 names, 7 names, 8 names, 9 names. Really, these are largely the same, and we're going to see that when we look to the benchmark that they track. This, of course, is very curious to even have it as a consumer staple stock. Total Energies, HSBC, LMVH. This is strange, right? But also, you're seeing that there's just ticking a lot of lower portfolio weights here. Another thing to keep in mind. FSTA, this is Fidelity, the ticker F for Fidelity. Not always the case. This is First Trust, so that's a different idea. First Trust versus Fidelity. But again, here you see the same names that are over here with Spiders and Vanguard. These are basically the same. And these are the iShares International and US. And again, this is largely similar to this, although you do see CVS here and you do see Kimberly-Clark here. But again, what they're doing, Procter Gamble is actually a higher weight in the iShares one. So again, Procter Gamble is your dominant concept of what consumer staples are. Down here, we've got another bunch of choices. Again, when you're seeing Nestle, that's going to be global, and that is the case here. And you see Unilever and L'Oreal. These are going to be non-US specific areas. So keep that in mind. The other thing to notice here, this is an equal weight. You can see this is all around 2.8, 2.9%. This is an equal weight ETF. Again, here you see a much more stable structure to the portfolio weighting. So if you want to get broad weighting exposure here, you're going to want to be looking into these types of areas. So these are the smaller ETFs versus the larger ones that are basically going to be the choice between 1, 2, 3, 4, all basically the same, or the other one, which is basically giving you a broad spectrum of names that are frankly not consumer ETFs. So down here, you've got another choice for some kind of global management, little different structure, a little different strategy. Over here, you've got the First Trust ideas. They do an interesting stock selection effort here, and you can see it playing out in the names. A little broader reference of names here. PBJ, food and beverage, as you might expect, with the tickers PBJ, peanut butter and jelly. There you go. That is your food and beverage area. So always come back here. Keep in mind, everything about this is relevant. The ticker name, the assets under management, the names of the companies, and their allocations. All of this is a real base for your understanding of these ETFs. Okay, so miscellaneous data points. This is going to be ticker. the name of the ETF, the industry it's in. As I said, that first slide will be helpful here. Sponsor, who is the provider of this? As you can see, we've already talked about State Street, Vanguard, Becklock, and Fidelity First Trust. There's Invesco, and so on and so forth. The benchmark, critical to look at the benchmark. This tells you also partly about the portfolio weighting, the inception date. This tells you when they started this ETF. And as you can see, some of them were back in 98, some in 2013, 2006, 2000. That's the story of the ETF businesses over the last 25 years. And of course, expense ratios are very, very material. For example, Bull Bear Quality 3000 is going to be a 125. Not a lot of assets under management. That's a 2014 era thing, kind of a specialty thing, and they're trying to charge you for it. Generally speaking, I do not see the value of these expense ratios relative to what you get. There are exceptions to that. We will discuss them. But keep in mind, again, as it always is with Vanguard, they're going to be the low cost provider as well. They are, and Spider matches them at the 10th of a percent expense ratio. Keep that in mind. Okay, returns on the largest consumer staples ETFs. Of course, this is important. First, I want to point out just the assets under management, who's larger, who's smaller. State Street is the big player in this area. They have 18 billion under management. Vanguard next at 7 billion. BlackRock at 5, and Fidelity and First Trust get to $1 billion, as well as Invesco. Really, it's these 6 names that dominate this space. These other groups are really, really tiny, almost non-existent to look down here. So we basically have 6 choices. As far as what we kind of have in terms of weighting, broad consumer staples is the bulk of it, 32 out of the 35 billion, but there are consumer goods and food and beverage ETFs like I spoke to. Okay, let's go on. Total return charts. Okay, here's COVID, here and here, and you can see that over the last 2 years, for the most part, these have all basically gone sideways. There are exceptions to that. UGE is one. So if we go back to UGE, I'm going to see that it is ProShares Ultra Consumer Staples. So that's one of those specialty areas, and it is kind of giving you a momentum. And this is also true for CHIS, which is Global Morgan Stanley Capital International China Consumer Staples. Of course, that is specific to that region. So if you're looking at different things, you're really looking at different things. So should you be buying a Lowe's here and here? Good question. Hard to say, probably not clear to anyone out there. The same is true to the majors, VDC, IYK, and XLP. They've all gone sideways for 2 years now, returns. There really has been no returns in this space in the last 2 years. But as you can see, they have sold off nicely over here. You got a nice entry point. So it may well be the time to invest in a broad standard ETF for consumer staples. It truly might be. Okay, return analysis, I just want to point out, here are the high ones, IYK, PSCC, and UGE. As we spoke to, a lot of movement here, but actually played out pretty well for you over time. So you want to keep in mind that look at IYK, PSCC, and UGE. They really are different ways of doing things. Standard deviations largely the same, other than, of course, these are much more volatile. So this is like kind of a volatility measure. Keep that in mind. Okay, part 3, the ETF valuation metrics. This is a critical subject. We're going to be able to see some very simple things that are playing out here. 1, fund betas. Notice that the betas have been going down to 0.6 relatively constantly. And the other 2 that are not are the international ones, KXI and IEV. So what has happened is people have stayed away from these stocks, and it has lowered the beta because it's all been those magnificent 7 stocks driving the ETF of the S&P 500 and NASDAQ up and separating the betas out from these names. So keep that in mind. This is actually what that represents. It also shows you there's been no interest in the international space whatsoever. These are low beta names, generally below 1. And that is generally the case still, but there's actually been rotations away from these names. So maybe it's time to be contrarian and buy them. Again, here, the price to earnings ratios. These are just relative to the index. So these references are not as helpful, just the trends are. And you can see these have become cheaper. That's the point I want to make. This is a cheaper area for PE and for PB. And you can see, are we back to a level that's reasonable? I would say yes. The answer here on a lot of these charts is all the way back to 4 or 5 years ago. Here, actually much lower. So I do think there's some value in that perspective. Okay, I hope you enjoyed it. The slides are critical here. Folks, get a hold of them. You need them to study these ETFs. And ETFs are the easiest way for standard retail people out there and passive investors to get exposure to the sector at this point in time. So 866-794-6065. Strategy call at zackspro.com or find us on the web, www.zackspro.com. Thanks a bunch, everybody.